Hello, 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 everyone. Happy Wednesday. How's everyone doing? Middle of the month of October, closing in on option expiration on Friday. How's everyone doing? It was a bit chilly here. It was 66 degrees this morning for the dog walk. 66 degrees. I had to put a hat on and a jacket. Good morning, McRangers. Good morning, Sterling. We had Morgan Stanley's beat today. Yes, happy no Fed speak day. What are we going to do without a Fed speaker today? Bitcoin continues to move higher. I saw this one. Food prices are 22.5% in since 2021, but more importantly, they start accelerating again. What else do we have? We had the mortgage rates come out. Big drop in the applications because the mortgage rates came out at jumping from 6.36 to 6.52. We have a little pullback in the 10 years, so we're getting a pause right now in mortgage rates, but then I'm watching for the next rotation back up. What Morgan Stanley's third quarter profits are 30% funded, fueled by a rebound in deal making that had also buoyed its rivals, sending its shares up 3% before market open. Let's make a deal. There you go. Food prices rose 0.4% month over month, making the largest increase since September 2023. And that's last month in September. Is inflation dead? No. Doesn't mean it has to go back to, as I said, doesn't mean it has to go back to 6, 7, 8%. But again, it can remain sticky. Sticky. Now, normally when you hit a recession, inflation drops by about 3%. But right now, let's say we're at, over 3% in the core. I mean, let's say we're going to be running mid threes in those. That means your consumers still aren't going to get relief. It just goes back to maybe 0.5%, maybe even just still 1%. So in a recession, what happens if prices still keep going up for a bit, or as we enter it? Uh, 5 out of 6 major grocery store food categories saw a surge in prices. Wonderful. Wonderful, wonderful news. Thank you. We had Abbott today. By the way, Abbott has a potential double top. Abbott has a potential double top, even though they beat. Just keep an eye on Abbott if you're a bull, if that double top triggers. Good morning, Jacob. Can we look at Hewlett Packard? Just remind me, Royal Palms. Just remind me. It's not a stock I normally watch, but we could take a look at it. Democrats wants to raise inheritance tax by 65%. What tax don't they want to raise? Yeah, everybody hit the like. Come on, we need some more likes. There's lots of people in here. We need some more likes. Hello, Charles. Good morning. Fall here in Maryland is spectacular. Well, I remember fall when I lived in Maryland. It was very pleasant. Very pleasant. The trees are beautiful. Thank you for tuning in, Richard. All right. Let's move some windows around. Again, we had the mortgage stuff come out today. We got export prices coming out shortly. Sorry, they came out. I was on the wrong time zone. They already came out. Export prices dropping. Import prices actually dropping a bit. Year over year, exports dropping a lot, but imports not dropping as much. So we're still, this is still deflationary, but not as to the extent on what we're importing versus what we're exporting. And remember, we have retail sales and the Philly Fed numbers. We have manufacturing tomorrow. We have a lot of numbers tomorrow. So I'm going to be watching for setups that establish today for tomorrow morning. We have NVIDIA and all the chips back up except for Intel. China came out with something on Intel this morning and down over 100 basis points, but all the other chips are strong. All the other chips are strong. We also had ASML, which was supposed to be this morning, accidentally releasing their earnings yesterday. How do you do that? So ASML, if you missed it, I did retweet something. AMSL was yesterday, which also triggered more of the sell-off, but our chips already bouncing back. The rest of the mega caps are pretty flat to slightly down. Besides Tesla up a little bit, oil's trying to hold that 62.5% retracement level and firming up. The energy complex is firming up a bit. If we look at our sectors, utilities, basic materials, energy, pretty much everything's positive except for comm services, which is down 1 basis point. So it's flat. But everything positive, trying to recover after yesterday's sell-off, which wasn't even major. You watch these sell-offs, it's like people are like, the market is down. Oh, uh, people are so lulled to sleep at this point, it's insane. Do you have an opinion on indicator strategy like moving averages, RSI, and percent B? What do I mean? Do I have an opinion? I talk about my opinions all the time. I mean, things are on the chart because that's what I utilize. I love percent Bs, especially after pullbacks in the rotation zone or against key support. Uh, I use the moving averages to set up rotation zone and rotation zone entries. So that's where we sit with that. Again, now it's getting pretty priced in with how many days? 22 days, so still 3 weeks to go, but 96 for a 25 basis cut right after the election. Fear and greed, we were in extreme greed yesterday, just dropped to greed. PE ratio above 37 and options expiration on Friday. Don't mix that up because it could still have an impact on the market, and that's freed up next week. Again, we talked about Morgan Stanley and Abbott. We also use US Bancorp. ASML was yesterday. After the close, we have Alcoa. Was that after the close or was, yeah, Alcoa's after the close. Abbott was this morning. So watch that. CSX will be interesting in terms of rail traffic. And then tomorrow we got TSMC before the open. So that can also be moving, especially with the AI chip sector. Couple of daily double bottoms. I've been following Intel, Halliburton, Trip, and weekly IBB, which has got rejected at longer term 62.5. If you have time, take a peek at the end. Thank you, MJ. Thank you for jumping in on the chat. Well, you know what? People are following some of the doubles. People are following some of the, the 62.5s. I'm happy about that. That you can maybe take something and incorporate it into your trading plan and your trading strategy. So we actually have two very key bottoms right here from yesterday and Monday. So right around 58.50 to 58.46 is a very key support zone with uh, rising rotation zone. Cycles are still down. We may be in for a more back and forth day to slightly bouncing, but on any pullback, I'm watching 58.46 to 58.50. Now, without a major Fed speak, I don't know what would trigger a downside in the market, but if we did, the next key support level for me would be 58.30. Uh, other than that, we don't have a little mini double bottom yet. So that just means you can't use double targets. Come back down here. See, it did not reach the 75. It actually came down to just below the 62.5 and then bounced up, which is key. So if you're watching something going into the open and we have downwards pressure, I'd be watching about 58.57 to 58.59 for a little support zone. Now, breaking out, we do have a clear path move from yesterday's sell-off. You actually have an advanced clear path move on the 1 hour. So on any break higher, if we look here, this is more for the day traders, but I'll be watching especially the key resistance near the end of this advanced clear path move about 58.84 on any rally. The minor levels I'd watch is 58.75 to about 58.78. That's for the more of the short-term traders. Now in the longer term, keep in mind we have weekly cycles at the top. So especially, I was watching for it earlier this week, but we've not had any weekly rollover, and we still have daily cycles going down. So we are still poised for potential more of a topping area, and we are running out of momentum. We'll talk about gold in a minute, dark screen. NASDAQ pull back into, this was very pretty yesterday. So prior, remember I watched the candle bodies more important than the wicks unless we have multiple wicks lining up at the same place. We pulled back yesterday, just closing at key support. So far trying to rotate back up. If we pull back, 2250 is key, and then the bottom of the rotation zone in the 62.5 is 2140. Can't even read that level. 20,139, right around there. So that's what I'll be watching if we do pull back on a bounce. There's very key resistance at 20,431. 20,431. Let's see how that lines up with the key harmonics. Yeah. So we have some key resistance there, and then the next key level is 20,466 is major, which I'll be watching today. That's actually a prior top area which broke and might be resistance, and also the 50% retracement. The only way I can get more into more bullish mode is if we rally massively and close above 20,520. And I know Charles is looking for a short NASDAQ around 390 to 400, but will hold above 458 man 30 minutes. Look for longs. There's Charles is working out his strategy going into the day session, already working out his strategy. Very good, Charles. The Dow still holding well above. It came down yesterday to this key spike high from Friday to September 27th, but major support is still coming in about 42.7. All right, let me pull off this harmonic, which is done. On any rally, just get, you can see that what I'm doing exactly here. This, hey Smokey, one of our dogs is outside having a wonderful, joyous morning. 43,200 is very key resistance for me on any Dow rally. I'm just using the retracement harmonics that led to from yesterday or the prior day's highs to the lows of this morning. Russell, we rejected a little price here and now moving back up. We are in little mini double top territory. That's the only thing that will turn me more bearish on the Russell. Also now, if we break out, remember on the longer term, we did close above the 62.5 a couple times. And so we still have the 87.5 magnet price, and I put in the short-term harmonics. And those are the forward harmonics from the lows of September 11th, because we have this multiple high-low pattern. So I'm using the most recent major swing low to the high. Richard asked about how I'm doing. I'm trying to explain more of which harmonics I'm using. So if we do break above 2,300 roughly, 2335, and then my major target cluster due to the 87.5 rule and the minor harmonics are about 2358 to 2367. We have not broken above this area yet. So I still need a follow through breakout. But if you're trying to trail something or move something up, those are the targets I will be looking for higher. On any pullback over the next day or so, 2250. VIX, not much to talk about. We've got some key numbers coming out tomorrow. The DAX on the bigger term still has a potential double top in place. This would be more of a medium term sell for me. On a pullback, very key support is 19.5. So other than that, not much to talk about. There's still a gap left behind to 19,647. The notes, remember, we had the little mini double triggered on the 4-hour yesterday morning. Now came up and look, hit the first target, little reaction there. So that would at least be a stop reduction, and that would be an aggressive stop reduction for me. Why? Because it's against the daily rotation zone, and we're getting the cycle tops. If not, if you got into a better price or more scalping, that could be also a partial take profit area. because we don't have that much more potential upside, because look where the targets are. We have a major resistance level at 112.29, 112.30. 112.30 being the final target for the double. The yields dropping into a very key support area in the rotation zone with cycles getting to the bottom. I will be looking tomorrow, especially if we have a percent beat buy setup with key numbers coming out tomorrow. If this becomes a percent beat buy setup, I will be watching today's high on the micro yields. It's not guaranteed it will, but that's what I'll be looking for, with also a pullback in the rotation zone. So back to your question earlier, that's why I use the moving averages. I use percent B. You know, we came out of RSI being overbought with a divergence up here. That's why that's on the chart. And we are getting, with the stochastic RSI cycles, getting to the daily bottom, but not yet turning up. 10-2s, not much to talk about. Dollar index, really this is interesting to me because we had a pullback on the daily cycles with some divergences, but it's still a sideways correction. We've hit that 50% harmonic multiple times. If we do break above this 103 area, the next key targets are 103.40, which is the 200 and the harmonic. And then the next key areas is 103.80 area, because the close of that would then shift it to longer term where it could be higher for longer. Right now, between this 103 and 103.80 is a major potential rollover zone. Crude. We have set up for a potential little mini double bottom against the rotation zone, and that was it's valid on the 4 hour, so a 4-hour close of 71.31 needs a close. We're getting back to cycle bottom area, but not yet confirmed. This would be a little bounce thing. We don't have any real rotation zone against us, and this would just bounce into some key resistance areas. What else? Gold. Gold. We hit the 87.5 rule coming out of the channeling flag pattern. Now, on a more medium-term basis, we do have a potential double top. So now, for medium-term things, I now have a key point, which is on a close above 26.18.8, so just call it 26.18. That looks for a pullback. This is not a major top. This is an intermediate top, which may never trigger. Other than that, the prices are still higher on a breakout to new highs, because we are approaching that again. 27.34 could be used in the short term to lower stop or raise stops in 27.60. All right. On a more significant basis, if you want to use your longer term harmonics, I'd be using these October 23 lows to this most recent major pausing area, which then would give me the next major target area about 28.20. If I'm getting too much in detail on some of this stuff, let me know. I know, before I forget, Hewlett-Packard. I know Royal Palms wanted Hewlett-Packard. Coming into earnings on not till the end of November. In the short term, you have let me get this rogue line out of the way. In the short term, you have very key resistance level that's being tested. Above there on a breakout, let me look at the weekly real quick, because it's trying to build a base. It's trying to build a solid base. The only thing that turns me overly negative if you start closing back below about 32, because that would mean this base would have failed and you'd have lost the 50-week EMA. In the shorter, and you'll potentially lose that 200. So other than that, on any pullbacks to key support, we could watch for bounce patterns. However, this would be this is an either or for me. Either it's got a pullback to key support, and then I would need to watch for some kind of buy setup, or it needs to break above this 38 level. Then we'd be looking at 39.30, and then right around 40.30 would be the key targets higher. Other than that, if you're looking in the real short term, your key support in the short term is about 36 to 36.50. Now, where did I leave off? So I hope you're paying attention because I'll throw things in there. Yen is still pausing at the first target with the rising rotation zone, so we could still see some yen weakening. Key support 148.65. Euro, we broke below. We hit the next little minor harmonic within the bigger double pattern, and we're finally back to the 200 area. Okay, tomorrow we might get a bounce play set up with a potential percent B buy for a bounce. That would be a very aggressive bounce play only because then I'll watch for the next rollover in the euro. That's something I'm keeping an eye on in case the dollar weakens after retail sales numbers. Other than that, the target's still lower, 108.53 and roughly about 108. Let's take a look at Bitcoin first. Bitcoin now on any pullback, 65, 66K is support. We are getting overbought and cycles in the top in the short-term basis, and we have a lot of resistance. Even though we're breaking out a flag pattern, remember, there's lots of stopping points. So I would not get overly lackadaisical about a stop, especially if you're trading this in the short term. Spiders. Today, on any roll down, would be watch for the gap fill to 579.78 and the major supports 577.77. You do exactly what I did on the harmonics on the futures. So, for example, targets the upside 581.91 and then 582.75 roughly. A close about 582.75. That shifts it to the 87.5 rule. But that's exactly how I'd set that up, especially with the rising 4-hour rotation zone. The Qs, same thing. The Qs, same thing, into the rotation zone yesterday. So now this could be with, if this bar closes, this is where I would look for a potential percent B buy set up if we get some momentum to the upside. I'm expecting a choppier day, but on any rally then, if we start breaking above this 4-hour high, I'd be looking for a target area. We have a significant cluster up 493.50 to 493.75, then 495. Hold on one second. What else do we have? I want to get to some other things. Let me just glance at NVIDIA quick after its sell-off. Also today, same difference on NVIDIA. Key targets above 132.81, which we're trading off now. The key targets are 134.25 and 135.50. What else do we have? We had where is it? Couple of daily double bottoms have been falling. Intel. Yeah, Intel's still completely valid even after hitting the first and second. We've talked about Intel before off this double bottom. Trying to find some key support, hitting the first and second target. So it's definitely the stop's been raised on this. Keep in mind the line in the sand is 20.82 on a closing basis to invalidate the rest of the double. What else? Halliburton. This is a completely valid double. So you see here it did not get below 4,093.90. So it is valid on there. I think everybody should have become very proficient with the double rules, and now through the first stop into this move higher. So also, I just want to see how it lines up with the harmonics. So today or yesterday closed above the 62.5. So if this wanted to continue higher and you wanted to extend this 47.96 target, it would be 48.46. Again, not a trade recommendation, but you're definitely in trailing mode from my perspective at this point. Thank you for going over those. Boy, I can't type. Trip looks valid to me. We don't have to measure. We should always measure them off, but again, triggered consolidation, trying to move higher now with the rotation zone in your favor. So 15.62, $16, 16.39, and you do have a gap left behind right here and another one there. So keep that in mind on trip. Not yet to stop production. IBB, which have gotten rejected at the longer term 62.5. The longer term, rejected at the longer term. Which longer term are you referring to? Oh, this longer term. This one. Yeah, it's got rejected multiple times. Triple top right at that 62.5. But that's pretty key because if this keeps building a base, I'd keep an eye on this. Because if this keeps building a base and then takes out, so it's held the weekly rotation zone. So as long as we don't get a close back above about 143, I'd still be interested in this from the long side with cycles at the bottom, with then a raising the stops as it comes. This is how I look at it. Again, not trying to tell you how to trade. Raising the stops as it approaches this very target toppy area. But then if that breaks out and follows through with a close above this 150 level, you got 159 would be the next target, then 168.24. Very interesting. Remember, that set a massive double top pattern, had the sell off from there, that massive double top pattern, then took a while to build a base. You had a minor double bottom, just play it out, and then continued to grind higher, but really watch that 150 area. Thank you for all that, MJ. Hope you're still here. Thank you. I got that. Unless I missed something. Help me understand something on the VIX1 daily chart. There's only been 18 red candles all year. Is that just confirming the volatility rises later in the session? So why? I don't have an exact comment on the why. I don't have an, it looks that way. It looks like generally you get stuff, and I don't know the why. I'm not going to pretend to know the why. Hold on. I do not know the why, excuse me. But that's an excellent an excellent question. So it looks like volatility does rise throughout the session on the one day. That was the weekly. On the one day, it doesn't matter. Look at so that's a completely valid observation. If you're playing probabilities, then you'd be looking for the volatility to rise. I just don't have a comment of why it happens. I'd have to do a lot more research into that. You're welcome, MJ. I really don't like to just. I'm not going to make stuff up or I'm not going to say something that I would not be able to validate because I want to answer a question. But that is completely observational. That you know, volatility tends to rise during the session. It's got to be tied to something with short-term options, though. It doesn't have to be. That would be my guess. But I'd have to really work that out to see what's going on. Let's take a look at the S&P. Little selling pressure into the open. So again, key support zone 58.46 to 58.50. In order for me, if that's where I'd be looking for some buy patterns. Some minors 58.56 for very scalpy. I would need to see how the tick opened though. I always got to put this stuff in context. So You had a stronger tick opening, spiking to 1200, but now pulling back in the market did sort of sold off with that. That's where, from a bullish side, I will be patient and watch for buy setups. And since we may end up in a choppier day, I can't use aggressive targets. I have to use minor targets. For example, a minor target area on any buy setup would be, first it would be this 58.68 area. And then I'd start looking if it broke above there for a higher target. Now on a continued pullback with a tick, if it rolls over and pulls back again, my major buy area is 58.46 to 58.50, where I'll watch for a potential setup. All right, yeah, I'm not here to just hear myself talk and mislead people. That's why I share all the information. And if I don't know something, I don't know it. I mean, I literally, and I won't talk about like stuff that I don't really at least have some thoughts on. I mean, if you could find something and you want to share it in the room, if you want to do some research on it and share it in the room, we can all look at it together. We can all learn together. You know, that's a completely valid thing. I have to research things all the time. So this is still, by the way, just keep in mind, this is still valid on a weekly basis with the first and second target for the potential double top in Apple. On a weekly, yes, you've had multiple tops, but it did not get down far enough to invalidate it. That does not mean it won't break higher. It's trying to, but keep an eye on that. That's very key for the markets too. Just wanted to point that out. Old friend Cisco's popping. Cisco, well, look at that move. When are there? Look at this. Look at this. Cisco riding the train higher. I got to flip this around. That's an instance where the 62.5 rule did not work. Remember, it's not 100%. There's a clear instance of where it broke down multiple times below 62.5 and did not follow through. But then we closed above it on the upside, pulled back beautifully to the rotation zone. Next major target area is 56.47. Well, thank you, Ted. You've done some research on the VIX one day. It's much more precise than standard VIX for predicting daily indexes, and it would be. And it would be completely, because your standard VIX is roughly 30-day. It's more tied into the longer term volatility. All right, with that, thank you everyone for tuning in. And I will be back retail sales tomorrow, lots of key numbers tomorrow. So personally, I'm going to be looking to see what kind of setups we end the day with, because retail sales come out 1 hour before the cash open. Until then, I shall talk to everyone later. Bye for now.